Hey guys, Sean here. In 1806, the French Emperor Napoleon imposed the continental system on the British Empire. He went around Europe blocking the import of British goods and demanded that all connections were to be cut off. Now, this was an economic sanction, and he wanted to destroy Britain's ability to trade, cut off their revenue, and force them to eventually surrender. Now, in the short term, it hurt Britain a lot. Their exports dropped by a third, inflation soared, and unemployment went up. However, long term, this didn't work. Countries eventually bypassed the sanctions and decided to still trade with Britain while the French economy suffered. Now, the same thing is happening today, but it's the United States going around the world asking nations to impose a price cap on Russian oil. And this move could backfire badly, and if it does, we can expect to see higher oil prices, which will cause inflation to spiral out of control. Right now, we are seeing inflation at the gas pump hitting 60%. And this move is a dangerous gamble that I don't think the world is really ready for the consequences. We are about to see energy prices go ballistic, food prices climb even higher, and this recession is about to get much worse. Now, if you don't know what's going on, basically the G7 is on the brink of imposing a price cap on Russian oil. So if the price of oil is say $100, they will value it at only $60 or $70, and then Russia can only sell it at that price. Now, the big idea is to ensure oil continues flowing to the global markets to increase supply and also reduce Russian revenues. When we last covered this, the G7 was just floating the idea around, but now they are serious. In fact, Janet Yellen is on a world tour to sell this idea to various countries. So far, we have South Korea willing to support this price cap. China is calling it complicated, and India is still thinking about it. So support right now is still lukewarm at best because many countries inherently know the domino effect this can have. Now, Russia's Prime Minister has fired back saying that Russia won't supply oil if a price cap happens, and I think this is a clear signal that maybe they won't play ball and cut off supply for real. Now, one thing we are certain of is that Russia follows through with their statements, with their threats, and this is spooking the oil market. In fact, oil rose by over 1% over this issue, and we need to be closely watching how this plays out. The big problem with a price cap is that it defies supply and demand dynamics, and you're assuming everyone else will play ball, including Russia themselves. Now, this is really not the case. Even if the G7 countries are all united with this price cap idea, they will need the buy-in of various countries that Russia could sell their oil to. We are talking about the Middle East, China, and India, all of which have been enjoying discounted oil prices from Russia so far, so there's really no rush for them to comply. And this is why Janet Yellen is in Asia to peddle this idea to countries like India and Japan. But it's going to be a tough sell, right? Analysts at Nomura worked out that for every $1 increase in the price of oil, India spends $2.1 billion more on their energy imports. Plus, we have hedge fund managers coming out to say that if India weren't buying Russia's oil supply, the price of oil would be $10 higher, which will make energy inflation even worse globally. Now, Saudi Arabia, the world's biggest producer and one of the largest exporters of oil as well, they themselves have been buying Russian oil at cheap discounted prices. From April to June this year alone, they bought almost 650,000 tons of oil. That's double their regular imports for power generation. Plus, we know that Biden failed to secure any oil deals or commitments from his trip to Saudi Arabia, and now Putin is trying his luck with the Crown Prince MBS and might really pull something off. So the support for the price cap isn't exactly strong at this moment. But the funny thing is now there are two narratives for the oil price cap. We have a US Treasury official saying that oil could surge by 40% to $140 per barrel if a price cap doesn't happen. And on the other hand, we have analysts from the private sector calling this price cap a waste of time that won't work. In fact, we have John Mont, the architect of benchmark oil pricing himself, coming out to say all these mandates to fix prices has been tried before. The US tried to fix oil in the 1970s, the UK tried to fix forex prices in the 80s, Mexico tried to fix tortilla prices, and then boom, the market settles. It's a waste of time. He goes on to further say, let's assume every possible buyer in the world agrees, then Russia says, I'm not selling a drop of oil. Beat me. Immediately the system breaks down as buyers have an alternative to the market price of oil, which makes total sense. Why would Russia sell oil at a price cap? If the price cap is fixed at say $50 and the open market price is $100, Russia can always sell their oil at $60, $70 or $80 per barrel, and there will be buyers. And this is the big challenge with trying to sanction oil, right? It is really a fungible commodity. It is interchangeable for one another. It's the same issue with trying to sanction Russian gold, right? An oil producing country can always buy up the Russian oil supply at a discount, use it for their own industry, and sell off their own oil production at the higher market price. It's probably what Saudis are doing right now. They buy cheap Russian oil for their own consumption to power their generators and then sell their own production at a better price. And this makes total economic sense. And we need to discuss the consequences of an oil price cap. Right now, there isn't an agreement between the G20 countries that Yellen is trying to sell this idea to. In fact, Indonesia's finance minister came out saying that this won't solve the world's energy problems. She specifically mentioned putting a cap definitely is not going to solve the problem because it is about the quantity, which is not adequate comparing to the demand which is in place. So let's analyze the situation. What happens if the most likely outcome was to happen? What if Russia decides simply not to sell their oil? Now, according to the World Economic Forum, Russia is the world's largest exporter of oil products. They sell around 7.8 million barrels a day. There's a lot of oil, and around 2/3 of it goes to Europe, right? So you kind of get who will be hurting the most if Russia decides not to sell their oil. Now, if we dig deeper into the numbers, we can see that Russia accounts for 5.5 million barrels, or around 26% of the OECD countries' oil imports. We're talking about countries like France, Germany, the United States, the UK, and Korea. So just imagine if 25 to 26% of their imports suddenly disappear. Now, this will cause energy and gas prices to shoot off the roof in countries that are still extremely dependent on Russian oil as well. We're talking about Poland, Finland, Lithuania. Over 50% of their imports still come from Russia. So these countries will be feeling the brunt of the oil increase. But for the rest of us, global oil prices will shoot up as well. So all these analysts predicting $140 oil if the price cap backfires could actually be right. We even have banks like JP Morgan forecasting a horrific $380 oil price in a worst case scenario if Russia really turns off the oil supply to the world. So what does this mean for us? Now, obviously, we won't know what the G7 will do, and I kind of give this a 50-50 odds that they might go through or scrap the entire oil price cap idea, right? Now, we understand that Russia is still pushing forward in the Ukraine war, they are still expanding their goals, and they want more territory. But the oil price cap might not stop Putin from pressing forward, and it could hurt the world economy, which is at the doorstep of a global recession. Now, if you really want to push the world towards a financial meltdown, I think even $140 oil could do it, right? On one hand, people will be spending more money on food and gas, and you can kiss goodbye to any discretionary spending. And on the other hand, industries and manufacturers will see their cost of production fly to the moon. Now, if you take a look at the PPI, the Producer Price Index, producer prices are already up by 11%. But if you throw in energy at 54%, we can see how businesses are really suffering from high energy prices. And we all know what happens, right? All these price increases will be passed down to the consumer. It'll be passed down to us sooner or later. So just imagine if a price cap comes out and Russia decides to cut supply, everything from the price of food, gasoline, plastics, shampoo, and cooking oil, all these are going to hit up in price. So if you haven't been stocking up on your food and consumables, I think it might be time to visit your supermarket again. There aren't really good places to place your money in this market, and I think the best ROI you can get is going to be your groceries, right? I know that's a very weird thing to say, but desperate times, desperate measures. Now, what really worries me is how Russia will respond after the oil price cap. What happens next? What if they decide to weaponize the rest of their commodities? We are talking about base metals, fertilizers, wheat, grain. Now, if Russia decides to constrict the world's food supply, this could be a game changer. Right now, Russia and Ukraine have signed a deal to export grain from the Black Sea. That's very good, that's very encouraging. But they can always back out of it at the last moment if the price cap really comes on, right? Now, maybe Russia wants more concessions. Maybe they want the world to pay for the grain in ruble, like what they're doing with Europe's gas supply right now. So things are really getting very volatile in the world today, especially in Europe. So get prepared if you're still sitting on the sidelines, because right now it seems mainstream media has been catching on to recession worries. They are coming on to the realization, to the fact that, hey, something might be wrong with the economy, right? Now, remember what I said, it has to be a controlled demolition. Everything will be okay. It's just a slow down until it suddenly isn't, right? We have been talking about it for ages. We know that probably one day when it becomes official, then a lot of dominoes will start falling, right? We're talking about layoffs, we're talking about consumer spending taking a nosedive, and honestly, the last thing we need is an oil price cap that could send energy prices to the moon. Now, a lot of bad things are lining up on the horizon. So, guys, save every dollar that you can. Don't waste money because you probably need it down the road to put food on the table. And if you have excess cash, you can buy up assets when they become dirt cheap. So, let me know what you think. Do you believe the oil price cap will come through? Will it backfire and cause Russia to simply stop supplying their oil? Will it escalate even further? Let me know in the comments below. Stay safe, and if you enjoyed today's video, be sure to smash the like button and subscribe as we navigate through these turbulent times. Thank you all for watching, and I'll see you soon.